Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 19th, 2018. I want to do a midday market update. This will be, for the most part, a follow-up to last night's market wrap. I'll try to cover the same securities in the same order. We are seeing some interesting developments today and some things that might be actionable trade ideas. A quick admin note: I'll be out of the office tomorrow and probably the better part of Monday. Not sure if I'll be in front of my desk on Monday or not, but definitely by Monday evening. So I'll maybe a little bit late in getting back to emails. And if anything's urgent, just use the contact form on the site. I'll try to check that email over the weekend. Otherwise, trading room stuff might not get back to until Monday. All right, this is NQ E-minis. Start out here. These are the futures. And last night we were right about up here when we closed, after the market closed. And you can see almost perfectly to the button. That's that first support level I had at 73.59.24. I know the text is kind of small there. Hit it about to the button. You can see two 60-minute candles on it. So that's a reaction so far. Reaction is defined, at least in my opinion, as a pause and or a consolidation or a bounce. So we've had a minor bounce so far, but the important thing is we need to take that level out. I still think it'll get taken out. There it is right there. There's your support level. There's the previous reaction high right there. A little back test of it. And then, of course, this next target. So if we take that out, this would be the next stop, I believe, on the NQ. What I think will happen, I continue to see more selling, the volume pickup on the downside when the leading FANG stocks are to the downside. Um, and I think we're going to continue to see that. That's just my guess now. I think Netflix, that big swoon down they had after earnings, and remember, the stock's still below. The fact that it recovered a good deal of it, don't be surprised. It's one of the largest companies that was down big. The market's still up. So you're naturally going to have dip buyers step in. But most importantly, the stock closed solidly red that day, down over 5%, and it's still well below those levels. And or I should say now, most importantly, it's still below trend. And I think that's going to cause jitters. Like I said, that day, if I ran a big institutional hedge fund or mutual fund and I was top heavy in these FANG stocks, that would have me check my risk parameters. In other words, that all these companies have to do is slightly miss the earnings expectation. The bullish sentiment is so lofty. I checked the short interest on those recently. It is at the low end of its multi-year, historical range on all those FANG stocks. What that means is when you have low short interest, shorts are the only natural guaranteed buyers for a stock. If I short a stock, I must at some point cover that stock. So I am a guaranteed buyer. I can be bullish in rhetoric, and there's a lot of bulls out there that's saying, "Oh, buy all the dips, do this, that. The market's going to the moon." And if they're long and they have all their money committed, great. But if they have all their money committed, they can't buy anymore. That's the thing. What happens towards the end of at least a rally, if not necessarily market top, when all those who are bullish are fully in, they're all in. There's no one else left to buy. And more importantly, when you blow out all the shorts after an extended uptrend, two things happen. You don't have those shorts that take profits on the dips, so stocks tend to have those quick swoon downs, and that's usually why they fall faster than they rise, especially after an extended run. You don't have the shorts coming in to take profits, and those that are flexible traders like myself that are just as comfortable going short a stock as they are long, if a stock breaks down, they start to pile in. So that exacerbates the selling. You have longs after a stock breaks a trend line or some type of support level. The longs are selling, and then you have, especially with low short interest, you have a lot of shorts coming into the market and causing that stock to fall further and much faster. So that's that. We'll see what happens. But again, let's take it one step at a time. These are the levels. We're gonna, walk our way down. And again, it's earnings season. Microsoft is the first of the market-leading FANG stocks. I define those as FAAMG, not FANG. And that's the first of the big five to report today. So let's see what happens. And as I said, I don't expect fireworks, especially in front of Microsoft. We'll see what Microsoft does. And again, that's on the first out of the big five, with the rest to follow in the next week or two here. All right, so there's a level to watch on NQ. Let's pull up ES. Here's ES, the S&P 500 E-minis. Not much. It's down. It's still after this most recent divergent high, it's down, but still a little shy of the support level. The next support level I have, it did take out this one, the 2807, 2808-ish level. It's below that now, and it's minor support. You can see there's that reaction high. Let me just give you an idea why these lines, why I draw these where I do. You had all these reaction highs here. We broke out. That was a breakout to new highs, successful back test. So that helps to validate that level. And now we broke below it and we're trading just a hair below it right now. You can see we're 2808 as I do this, and that's 2807.96. Call that 2808. Let's not split hairs here. We're talking a nearly 3,000 point index. So, forget about the basis points. You can round off to and even give it a percentage of, plus or minus 5 points easily on these support and resistance levels with all this intraday noise. So there it is. We're really, we broke it and we're back testing that level now. And again, this is our next support. And, once we take out those recent lows, that's where the selling will probably accelerate if we are going to break those lows, which I still think we do. Okay, and for those of you that trade QQQ, same story, not much to update since last night. Breakdown back test, we're still rolling over down a little bit more today, but again, nothing big, and that's not, again, that was and is my expectation. Like I said, with all the five FANG stocks yet to report, market kind of goes in a holding pattern, but we're seeing a little bit of downward pressure, and Microsoft too. Let's see, Microsoft is down. Yeah, Microsoft is down. In fact, I noticed this too. Microsoft, I believe, is the only one down since Netflix reported the other day. I think it's the only one of the FANG stocks that is actually down from where Netflix reported, if I'm not mistaken. That was here over here the other day. And maybe that's, like I said, maybe it's nervous investors, longs taking profits, trying to reduce exposure. Um, to these big names that are widely considered bulletproof by the market, only because they've acted that way in recent months. SPY on the SPY 60 minute, we now do have prices below the bearish rising wedge. So once again, it's not an impulsive breakdown. You like to see impulsive selling after a breakdown below a wedge. But again, that's I think largely a function of fact. Market's kind of on hold right now. Let's see how earnings go here in the next couple weeks, and then I think this market will pick the next direction. I should update IWM. I'll keep this video private as last night's market update was, since I'm covering some trade ideas, actionable items, and sector analysis, commodities, things like that that aren't for the public. And this is an official trade idea. It's been kind of going sideways. This is IWM. I can't remember exact entry price. We shorted somewhere here, maybe on the break of this trend line. We hit our first target right here, and then we hit it again right here. So the trade's profitable, and this is our stop on IWM. I'm trying to recall if I made it on a daily closing basis or any move above. If not, I may revise that, because a story for a while now has been stop raids, and they know where the stop clusters are based. They're going to be right above this level here. You're going to have a pop if we get above there, and probably then close down below there that day if they run it up through there. So again, trade as you want, but if you set your stops on a closing basis, on especially even if it's based off these intraday charts, you're yeah, it does allow the room for a little more losses, but you're also going to minimize the chance of a stop rate, a brief pop above, and then move back down. And what I do, just if you're new to trading or investing or the site, when I do a stop on a daily closing basis, I'll just look. I have the luxury of being in front of the computer all day. I know everyone doesn't, but what I do is if 3:59 rolls around, the market's heading into the final 30 seconds or so of last minute or so of trading, and it looks like that security will clearly close above my stop and pull the plug there. Of course, you can also sell it in an after-hour session. These ETFs, index tracking ETFs, QQQ, SPY, IWM, they're very liquid in after-hours trading. You can get, usually the spreads are only a penny, just like they are during the day, and you just have to use limit orders. And if you're not familiar with that, you have to do a Google search or ask your broker, and your broker will almost certainly have articles on how after hours trading works. So that's that. I just wanted to mention, trading plan's a trading plan. We'll stick with it. I'm not happy how this is. How long it's taken for this one to play out. Yes, we hit the first target, but I still maintain this third target here. And I don't see enough in the charts to modify my trading plan. Although, if you're not in this one, would I take it now? Probably not. Let's just see. I don't like this sideways action here and this breakout. I had a minor downtrend line, which we just broke out of on IWM. But, this is the bigger picture tells me we just put in the most recent divergent high. We had this minor trend line break. That same 60-minute trend line right there here on the daily chart. So I can easily see the possibility we push up, make another marginal new divergent high before rolling down, eventually taking out this downtrend line on the daily chart. That's what we need to take out to really get the selling going in IWM. So that's an update on that trade. And here's SQQQ. Now I already covered the charts of QQQ, but since I'm doing the official trades, I'm not going to cover them all here. This one's working well, and there's our stop. That one is on a daily close below 1220. They haven't even violated the 1220. They made a run at it. They sure did, but like IWM, we already hit the first target. I haven't changed the annotated it there, but there it is. The first target was hit quick, so we got a quick pop on that trade. And the initial reaction, which is very common, that's why there's multiple targets. Those are levels that I expect a reaction, and therefore you can book profits, recycle back in on the pullback, or if you're not an active trader, just hold out for the final target or whatever your preferred target is. So I just want to say it still looks good. Divergence is still in place. There's not anything I see on this chart that makes me second guess this trade. They stop it out. No big deal. We can always re-enter. And again, you may want to use a larger stop if you think there's a potential for this one to run. I can certainly see a move up here at about 1483, especially if earnings season starts to rattle the markets here as these big FANG stocks report. And that's, from where we're at right now, just to quantify it, that's about another 19% gain. So, and I can easily see that, and I may extend that target depending on how this one plays out. So that's that. Let's move on. Let's wrap this up. Here's crude. I think I rolled into crude after the markets last night. There's that divergent low, 60-minute divergent low, support right here, and that support again it's not an arbitrary level. You see a lot of reactions back here, reactions here, 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 here. So this is a support zone. There's your divergent low. It went up, had a little kickback rally, came back in, tested the top of the support zone, and boom, right up to this is what I added last night as my first target. We hit that today, almost to the button. Went a couple pennies over, a penny or two over it, but and have since pulled back. Is there more upside? Again, this would be my maximum target. I don't think the risk reward is that good here anymore, and I'm leaning towards this capping that advance. But that being said, I answered somebody in the trading room. Would that be a good area to short it? Well, it's certainly objective. Short at that first level with a stop not too far above, and that may allow for a runner trade if this is all we're going to get out of these divergences. Now, if it continues on up here, I can tell you this would be a golden shorting op if the charts confirm. What I mean by that? Well, I want to see divergences or maybe some type of bearish candle. I want to make sure the daily charts confirm and everything else. But as of now, this is my preferred stopping point for the rally. I just can't rule these other two targets out at this time. Let's look at Nat Gas. Remember, Get It Right in the trading room last night brought up Nat Gas. Get It Right had a downtrend line similar, but I had a little bit different downtrend line. I drew Nat Gas. These are Nat Gas futures in this price channel here. And nice pop today, and it has taken us right up to the top of that channel. Of course, we had bullish divergences below, so I'm favoring a breakout. Nat gas is a volatile little sucker. I know a lot of you don't trade futures, and I don't use futures as official trade ideas. There are some ETFs out there, but of all the commodity tracking ETNs out there, then nat gas are the worst as far as tracking their underlying commodity, which are natural gas futures. UNG, what is it? UGAS, DGAS, those are a couple. And you can just plot them against a chart of natural gas futures, and you'll see that over time you lose money in those if you hold. You can use them as trading vehicles. And if the stars and the moon align, on a trade on the charts on natural gas, I sometimes I do add those as trade ideas, and I have in the past, and we made some quick trades on those. But that's it, a quick trade. Don't sit there and tuck those things away long term. Nat gas futures are more of a pure play. If you know how to trade futures, have access to a futures account, every contract in the nat gas futures, the Henry Hub futures. Let's see, I've got them. I took a position today. $27,280 is what it represents, but you put up, futures are margined, heavily leveraged. I mean, so you put up a lot less than that. So that's one way to trade it. And then targets. You probably want to know targets. This is right now my preferred target zone. This is if we break that channel, that level is at about 2.864 right there. That would be my preferred swing target right now. These are other little stopping points along the way, if you will. And there's my uppermost target at this point in time, about 290.02. Okay, here's Bitcoin. Again, this one was pointed out the other day by a member of Big Bad Wolf in the trading room as breaking out over that 7,000 level. So that breakout, is impulsive, everything you like to see. Big green candle. There was volume. I don't have volume bars on this one right now. And then I also had another level, and again, I need to probably do that now for you. I told you I'd adjust that trend line slightly lower, capture all these one, two, three reaction highs, a little spike through there. And that's about, we pulled back almost to that level today. That's about 7,200. So after a big move, it's not unusual to see a security consolidate, and that's what Bitcoin's been doing. Could prove to be a one and done. They may fade this pop, but as long as it holds this level, and most importantly, that 7,000 level, it looks pretty good. And as you can see here, this is, months going back, where are we at? May. This is mid to late May right here, mid-May. So this is many, many months of sideways trading. You can consider this a basing pattern. And that's bullish that we've broken out. And as long as we hold above it, and again, the lower range of that pattern, which kind of came in about right here at this point here, and that's at 7,000 level. So there's Bitcoin, and you can certainly trade these Bitcoin futures, GXBT. They trade like any other futures contract. And these are dollar for dollar. So there's 7,415 is the price. That's how much each contract is worth, $7,415. And two of the proxies for trading Bitcoin are overstock.com and Overstock. We just have to really zoom in here. You have a couple things on this chart. You have this called a resistance zone right here. You can see some candles a lot at the bottom of the zone. That's where most of the reactions occurred. We had a few intraday spikes, candlestick wicks, and now we're back to the bottom of that zone. There's also this trend line here. So just like Bitcoin, it's going to track Bitcoin very closely. It had a big breakout the day Bitcoin broke out. Bitcoin came back in. It's consolidating, back testing top of the range. So was Overstock. So you can look at it this way. This is an objective long entry here, especially if you believe that Bitcoin will continue to rally. And if Bitcoin doesn't, if that breakout in Bitcoin fails, this breakout in Overstock will most likely fail, and it will drop down below this, the bottom of the range and or bottom of the support resistance zone, and as well as that trend line there. But it's certainly objective here. You just have to keep your position size small. When this thing moves, it can really move. It went up 15% that day, and that's not unusual to see, gains in the double digits, daily gains on Overstock. And if you want to juice it up even more, Riot blockchain, this one went up 45% that day, and it appears to be, you can see the big move. We had a divergent low, big 45% rally from lows to highs, and this is what we call a bearish pennant right here. You have this pennant type action, which is a consolidation after a big move. Should it follow through the way you take a bull flag or bullish pennant, they're almost the same thing. A flag just has both lines down sloping. You take the distance of the flagpole, which is the impulsive move leading up to the formation of the pennant, and you add it to the lowest point right before where it breaks out. So that would bring you a little bit above, but again, I already told you my next target 783 and then 960. Those are unadjusted targets. If you want to look at this on a 60-minute chart, you can see that pennant a little more clearly. You can draw it as a flag or a pennant, 6 to 1, half dozen to the other, honestly. Same, criteria to that pattern, just a little bit different shape of the formation there. And we'll wrap it up here with SXE. I mentioned in the trading room, I put this one as a trade setup yesterday. It did trigger an entry, and unfortunately, this one came early in the morning. I'd really like to see these breakouts come during the day so you can scrub for volume, because you always have additional volume in the morning. Anytime you look at look at QQQ, you look at a volume chart. I can't see if I don't know if you can make out the daybreak lines, but volume patterns look like a smile intraday if you put up an intraday chart, a 1 minute chart, or anything like that, meaning big volume in the morning at the open initial. That's usually your highest volume bars of the day, tapering off down to a low around lunchtime, and everyone traders go to lunch, everyone else goes to lunch, and then it picks back up gradually in the afternoon, peaking right at the close with your biggest volume bars of the day right around the close or the open. And so that was what happened with SXE is yes, it popped. And that's the thing about breakouts. I put in there, as I often say, you want to ideally confirm alongside breakout with above average volume of 1.5 times or better your above average, I'm sorry, your average volume. 60-day, 90-day, 100-day, all the different charting programs use different, but at least go back 60 days. In this one, you had probably at that point above average volume, but that was the opening morning pop. And so, anyways, they took us out. There's nothing we could say about it. And, because the trigger was any move over 165. So, boom, they popped that, cleared some of the buy stop orders, moved it down. And it is an active trade. I'll have to look at what the stop parameter was. I was down here a little ways, I think down right around here. So we'll stick with it for now. Sometimes you have these little false breaks and then the stock will go on to follow through. But again, a trading plan is a trading plan. That's all you can do. So if you took it, great, hold on, set your stop based on your preferred price target. This one certainly has more upside potential than just these two that I listed here. But again, I'm not crazy about the fact it failed. And more importantly, if you're watching this video, because we're down below the breakout point, I would not take this one right now. That is a failed breakout at this point, not good. So even though it's an active trade, even though I mentioned it breaking out, if you're watching this video, wait for another move. And now at this point, you probably want to wait for a move above today's highs, or at least another move above 165 again. That should do the trick, I believe. If we get even above 165, we popped as high as 167 today. So yeah, talking a couple more pennies and wait for a print of 168. And I would put very good odds that if it can do that now after today's move and take out 167, it should run up to at least that first target, if not that second target. But as of now, if you're not in it, I would hold off until unless it takes out, like I said, today's highs. All right, guys, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Good luck on your trades.